Good morning this Tuesday, the 18th of June. I'm Grady Wolf, market analyst with Bell Direct. Wall Street started the new trading week in record territory for the Nasdaq and S&P500, driven by market optimism around the AI movement and ahead of Fed official speeches later this week, which could shine light on rate cut outlook. The S&P 500 ended the day up 0.77% at a record high 5,473 points, while the Nasdaq soared to close up 0.95% at 17,857, and the Dow added 0.5% to close at 38,778, snapping a four-day losing streak. European markets closed mostly higher on Monday, despite instability on a political front across a number of regions and against a clouded economic backdrop, leaving investors questioning the direction of the rate cuts and inflation outlook across Europe. The Stoxx 600 rose 0.12% on Monday, while France's CAC returned to positive territory, ending the day up 0.9% after mixed reactions to the possibility of a political victory for the country's far-right National Party in the upcoming election. In Germany, the DAX rose 0.37% on Monday, and in the UK, the FTSE 100 ended the day down just 0.06%. In the Asia region yesterday, it was all eyes on China, with a slew of economic data painting a very mixed picture on the economic front out of the world's second largest economy in the post-pandemic era. China's CSI index fell 0.15% on Monday, while Japan's Nikkei tumbled 1.83% on a slide in energy stocks, and South Korea's Kospi index fell 0.52% at the closing bell. Locally on Monday, the ASX 200 started the new trading week down 0.31% as a sell-off in tech and energy stocks weighed on the key index. Disappointing economic data out of China weighed on investor sentiment around the big miners yesterday, while investors fled tech stocks around concerns over the rate outlook of interest rates in Australia, which will be announced by the RBA later this afternoon. ANZ Indeed data out yesterday showed Australian job advertisements fell 2.1% in May, which at first glance appears very supportive of a slight loosening of the country's tight labour market. However, this slight decline keeps the job ads data 20% above pre-pandemic levels, indicating the labour market remains tight, especially following the nation's unemployment rate falling to 4% in data out last week. Gold miners rallied locally yesterday on a rise in the price of the precious commodity as investors do hold high hopes that the Fed will cut rates soon. Shares in wagering giant Tabcorp rallied on Monday after the company announced former AFL CEO Gillan McLachlan will step into the role of chief executive from early August. On the commodities front this morning, oil is trading 2.61% higher at $80.48 a barrel. Gold is down just over 0.5% at $2,320 an ounce, and iron ore is up 0.2% at $107.33 a tonne. Iron ore prices have jumped overnight after China's crude steel demand jumped 8.1% in May from April, indicating recovering demand in the world's second largest economy, which is a much needed boost to the economic outlook of exports from Australia's biggest iron ore miners. While this was a key step forward for the country's post-pandemic recovery, China's new home price data, also out yesterday, indicated new home prices fell at the fastest pace in more than 9 years in May, painting a further dire picture of the economy's struggling property sector. Taking a look at the Australian dollar, one Aussie dollar is buying 66 US cents, 104.31 Japanese yen, 52.05 British pence, and 1 New Zealand dollar and 8 cents. The highly anticipated RBA rate announcement will be handed down this afternoon, where it is widely expected that Australia's central bank will maintain the current cash rate of 4.35% for the next period. However, we are likely to see investors and markets react to commentary out of the RBA that indicates the rate outlook and a timeline to cuts. Ahead of the local trading session here in Australia today, the SPI futures are expecting the ASX to open the day up 0.38%, tracking Wall Street's rally overnight. And now let's dive into a trading idea for your consideration today. Bell Potter has significantly decreased the 12-month price target on Australian vintage from 41 cents per share to 21 cents per share and maintain a hold rating on the wine producer following the release of a softer than expected trading update and subsequent equity raise out of the company. And that's all for this morning. Have a terrific Tuesday, and as always, happy investing.